What if I told you that right now, you sitting there, could go from zero to CEO when it comes to smart investing? No magic, no insider trickery, just clear thinking, strategic moves, and 5 powerful stocks primed for break through performance in 2025. That's exactly what we're tackling today. 5 stocks 0 to CEO is buying now. Let's dive and leave with conviction. What if I told you that right here, right now, you have the chance to step into a different league of thinking, the league where decisions aren't just about surviving the present, but about building wealth that sets you apart. Too many people are waiting on the sidelines, scrolling through headlines, chasing noise, and hoping someone else will tell them what's next. That's not how CEO think. That's not how leaders act. The opportunity is in front of you, and the question is simple: are you ready to grab it? This is not about guessing games or chasing hype. This is about looking at the world through the eyes of someone who knows that 2025 is shaping up to be one of the most defining years in investing. The economic landscape has shifted. The rules of the game are evolving. Some sectors are collapsing, others are reinventing themselves, and a few rare players are positioned to dominate. That's where the focus must be. Not in yesterday's winners, not in the distractions of the news cycle, but in those powerful engines of growth that are about to accelerate. When I evaluate an opportunity, I strip away the noise. Forget the social media chatter. Forget the endless predictions. What matters is fundamentals, execution, and catalysts that can't be ignored. This year is different because we're entering a phase where artificial intelligence is no longer a buzzword, where energy security is not optional, where technology and aerospace are redefining the backbone of industries. These aren't vague trends, they are undeniable realities creating wealth for those who recognize them early enough. Think about it this way: a CEO doesn't wait for certainty. A CEO builds conviction, runs the numbers, understands the risks, and then makes the move while everyone else hesitates. That's the mindset I want you to adopt. Stop thinking like a spectator, start thinking like an owner. You don't have to be in a boardroom to make CEO-level decisions. You just need to change the lens through which you see opportunity. Look at semiconductors. Demand for high-bandwidth memory isn't just climbing. It's exploding because artificial intelligence models are hungry for it. Companies positioned in this space aren't guessing their way into profits. They're securing billion-dollar contracts and scaling production in ways that make them irreplaceable to the global economy. That's not speculation, that's structural growth. Now think about aerospace. The world is shifting, and with it, defense spending, airline recovery, and the demand for high-quality components are all surging. When a company continues to dominate through acquisitions, strengthen its balance sheet, and keep customer loyalty locked in, it tells you one thing: this is a growth machine. And when the fundamentals align with technical strength, the smart investor doesn't wait. Entertainment might sound like an odd pick when you're thinking of the future, but leadership in content still drives billions of eyeballs and subscriptions worldwide. Creativity, storytelling, and platform dominance will always have a seat at the table, especially when the execution is firing on all cylinders. Innovation doesn't always look like a chip or a rocket. Sometimes it's the ability to capture global attention and monetize it effectively. And then, of course, artificial intelligence is reshaping everything. Some names in this space have already run far, but when you see a company with a moat so wide, so entrenched, and with earnings to back it up, that's not a bubble, it's a dynasty in the making. You don't ignore that. You embrace it with discipline. Lastly, diversification is power. Growth is sexy, yes, but income sustains you. Energy stocks, especially those with strong dividends, give you a hedge against inflation and a stream of cash flow that balances your portfolio. That's not playing it safe, that's playing it smart. That's how you keep your wealth compounding even when markets get rocky. The world in 2025 isn't forgiving to those who hesitate. Inflation pressures, interest rate shifts, geopolitical challenges, they're not going away. But hidden in every challenge is a corridor of opportunity. Those who cling to fear will watch from the sidelines, while those who adopt the mindset of a CEO will position themselves to thrive. So ask yourself, are you waiting for the perfect moment, or are you willing to seize the right moment? Because the difference between the two is everything. The perfect moment never comes. The right moment is here. 5 stocks, 5 opportunities, each one built on fundamentals, growth, and resilience. This is not about luck, it's about clarity, conviction, and the courage to act. When you think at this level, you stop asking, what if it goes wrong? And you start asking, what if it goes right? That's the kind of question that changes lives, builds wealth, and creates legacies. And 2025 is the year to ask it. Do not underestimate the power of taking decisive action. Fortune doesn't wait for hesitation. It rewards those who see clearly, act boldly, and hold steady when the noise gets loud. That's the mindset you need. That's the mindset that takes you from zero to the level of those who build empires, not excuses. The path is clear. The only thing left is your decision. Will you keep watching, or will you start acting? Because everything you need to build your future is already in your hands. Imagine for a moment that you're standing at a crossroads. One road leads to hesitation. The other leads to opportunity. Most people freeze at this point. They think, what if I make the wrong move? What if I lose? That mindset is what keeps the majority trapped in mediocrity. The reality is, every CEO you admire, every investor who built lasting wealth, they didn't wait for perfect clarity. They made moves with conviction when the world was still questioning. That's the flow I want to walk you through today. How to look at the market, how to connect the dots, and how to move from uncertainty to opportunity with discipline. The first step in this journey is awareness. You can't seize opportunities if you don't see them. In 2025, the economy is shifting faster than most people realize. Artificial intelligence isn't on the horizon. It's here, reshaping industries from healthcare to entertainment. Energy markets are volatile, but companies that control supply chains and maintain strong dividend payouts are thriving. Aerospace is no longer just about flying planes, it's about defense, global travel, and securing the future. Recognizing these themes is how you start connecting the big picture. Most investors skip this step and just follow tickers. That's not leadership, that's gambling. The second step is evaluation. Once you know the sectors with momentum, you have to dig into the players that matter. A stock isn't just a piece of paper, it's a share in a living, breathing business. Look at revenue growth, profit margins, debt levels, and most importantly, catalysts that can accelerate value. For example, when a company is about to release new technology that every other business will depend on, that's not noise, that's a growth engine. When a firm dominates its niche and keeps acquiring competitors to expand, that's long-term strategy. This is where the narrative shifts from headlines to hard data. The third step is conviction. Here's where most people fail. They see opportunity, they even recognize the fundamentals, but they can't pull the trigger because fear paralyzes them. A CEO doesn't think that way. A CEO calculates risk, prepares for volatility, and then acts. It's not about being reckless, it's about refusing to let fear dictate the playbook. The truth is, wealth doesn't come to those who wait for certainty. It comes to those who can handle uncertainty better than the rest. Conviction is not about ignoring risks. It's about preparing for them while still making the move. The fourth step is timing. You don't chase at the top, and you don't panic at the bottom. You wait for signals, breakouts, pullbacks, consolidation. That's the technical side most beginners ignore. They think fundamentals alone are enough, but fundamentals tell you what to buy, while technicals help you decide when to buy. That combination is how CEO builds strategies. They don't throw darts in the dark. They wait for the setup that aligns the story with the chart. That's when they step in. The fifth step is management. Buying is easy. Managing is what separates amateurs from professionals. Do you trim when a stock runs too far too fast? Do you add when strength confirms your thesis? Do you have a stop, loss, or a strategy for limiting downside? A CEO always has a plan. They don't babysit every tick, but they set clear rules for entry, exit, and review. That's why they win over the long term. They're not reacting to emotion, they're executing a strategy. Now let's put this flow together. Awareness puts the spotlight on the right sectors. Evaluation identifies the strongest players. Conviction gives you the courage to act. Timing ensures you don't overpay or chase blindly. Management keeps your portfolio sharp and disciplined. This isn't theory. It's the exact narrative that takes you from being reactive to being proactive, from being a spectator to being in control. What's powerful about this flow is that it works across cycles. It doesn't matter if the economy is booming or contracting. This approach forces you to think strategically, not emotionally. In 2025, that matters more than ever. The noise will be deafening. The news will scream recession one week and recovery the next. If you fall for that, you'll keep zigzagging with no direction. But when you adopt this flow, you see through the noise, you anchor yourself to facts, and you act with clarity. Every single stock I'm watching this year fits into this narrative. They're not random picks. They're companies that pass through every stage of this process. They align with megatrends. Their fundamentals are solid. Their charts are signaling opportunity, and the risk-reward setups make sense. That's not luck, that's process. And when you have process, you can repeat it, refine it, and scale it. So when you think about where you are today, whether you've been investing for years or just starting, the flow remains the same. Stop jumping from tip to tip, stop reacting to hype, and start building your own conviction through awareness, evaluation, conviction, timing, and management. That's the pathway. That's how you stop drifting and start leading. That's how you transform from someone who hopes for good outcomes into someone who builds them. Because at the end of the day, opportunity isn't found by accident, it's created by process. And the flow I just laid out is your blueprint for turning uncertainty into strategy and strategy into results. Clarity is power. Most people complicate investing until they paralyze themselves. They chase every indicator, every headline, every rumor, and then they wonder why they can't make progress. Simplicity is what separates those who win from those who waste years in confusion. You don't need to know everything. You need to know what matters. That's how CEOs make decisions. They don't drown in noise, they cut straight to the essentials. The market may look like chaos, but underneath the surface, it's patterns, fundamentals, and catalysts. Once you train yourself to see those clearly, the fog lifts and everything becomes manageable. Start with this simple truth. A stock is not just a ticker symbol. It's a business. When you invest, you're not buying a lottery ticket. You're buying ownership in a company that produces real products, earns revenue, pays employees, and expands markets. If the business is strong, if it has customers, cash flow, and growth potential, that stock has a foundation. If the business is weak, if it burns money with no clear future, no chart pattern can save it in the long run. Strip it down to that clarity. Strong businesses make strong stocks. Now let's talk about the drivers. Every company has three levers that matter most: revenue growth, profitability, and future catalysts. Revenue growth tells you whether the company is expanding or shrinking. Profitability shows you if they can sustain themselves or if they're burning cash hoping for a miracle. Catalysts are the sparks: new products, acquisitions, partnerships, or industry shifts that can unlock the next level. That's it. Keep your eyes on those three levers, and you'll instantly cut through the fog that traps most investors. When you look at semiconductors, for example, the story isn't complicated. Demand is exploding because artificial intelligence needs faster, more powerful memory chips. That's not hype, it's physics. Companies producing those chips have order books that stretch months ahead, with clients lined up because alternatives simply don't exist. That's clarity. You don't need to overthink it. The world is building AI systems, and those systems run on chips. Own the suppliers, and you own a slice of the future. Shift to aerospace. Here the clarity is just as simple. Air travel is recovering, defense spending is rising, and parts suppliers who dominate their niche are thriving. If a company has spent decades building trust with airlines and militaries, if it keeps acquiring smaller competitors to widen its moat, then you know it's positioned for long-term growth. Don't get lost in speculation about fuel prices or temporary disruptions. Focus on who owns the supply chain. That's where the clarity lies. Entertainment looks noisy, but strip it down and it's obvious. Content is king. Platforms that consistently deliver shows and films people can't stop talking about will attract subscribers, and subscribers translate to recurring revenue. The clarity here isn't whether one show wins or loses. It's whether the platform has the infrastructure and creativity to keep people locked in year after year. If the answer is yes, then the stock remains strong. Artificial intelligence hardware may look overhyped, but simplicity reveals the truth. The company dominating GPU has an unshakable lead, endless demand, and earnings that justify its valuation. People worry about bubbles, but bubbles are built on speculation without fundamentals. In this case, the fundamentals are undeniable. The world needs more chips than they can produce, and they're minting profits quarter after quarter. That's not a bubble, it's clarity. Energy often gets ignored because it feels old-fashioned compared to tech. But look deeper. Demand for oil and gas isn't vanishing, and companies with strong dividend yields are giving investors both growth and income. That's balance. That's protection. While others chase hype, clarity tells you that energy remains the backbone of modern life. The company paying you to hold while also positioning for the future gives you resilience no matter what happens in the broader market. Clarity also means discipline. You don't need to own 50 different stocks. You need a handful of strong companies in sectors with undeniable momentum. You don't need to trade every day. You need to identify the right entry points, build positions gradually, and let compounding do its work. CEO don't jump from idea to idea every week. They identify winning strategies and stick to them with conviction. That's the mindset you need to embrace. The market thrives on confusion. Headlines want to scare you. Analysts want to drown you in endless charts and jargon. But wealth is built when you step back and simplify. What's the business? What are the drivers? What are the catalysts? If those are strong, the stock will follow. If they aren't, no amount of hype will change the outcome. Simplicity is not weakness, it's mastery. Remember this: the most successful investors aren't the ones who know the most. They're the ones who see the clearest. They ignore the noise, they focus on the essentials, and they act when others hesitate. That's clarity, that's simplicity. And in 2025, when the world is more distracted than ever, those who embrace it will rise while the rest stay lost in the fog. The clock is ticking, and the markets don't wait for anyone. Opportunity doesn't stand still while you decide if you're ready. It moves, it shifts, and it rewards the people who act with urgency. Too many investors make the mistake of believing time is unlimited, that they can sit back and think about it until the picture feels safe. But by the time safety arrives, the move is gone. That's why urgency is not about panic. It's about recognizing the right moment and seizing it before hesitation costs you the gain. Right now, 2025 isn't just another year. It's a turning point. The forces shaping this market are unlike anything we've seen in decades. Artificial intelligence is no longer a theory. It's embedded in daily business. Companies that power AI aren't waiting for you to make up your mind. They're scaling, they're winning contracts, they're building out infrastructure that will dominate the next decade. You either step in while these moves are still unfolding, or you end up buying at double or triple the price later. That's the relevance of this moment. Look at the energy markets. Global uncertainty, rising inflation pressures, and demand that refuses to vanish have created a setup where strong energy companies aren't just surviving, they're thriving. They're paying dividends, hedging against inflation, and rewarding investors who had the urgency to buy when others doubted. The relevance here is clear. Energy is the backbone of modern economies, and no transition away from fossil fuels happens overnight. The players who hold the line today will keep paying you tomorrow. The same urgency applies to aerospace. Supply chains are stretched, travel demand is climbing, and defense budgets are expanding. A company that dominates parts manufacturing doesn't wait around. It locks in contracts, it grows by acquisition, and it becomes irreplaceable in its space. Investors who recognize this early enough ride the wave. Those who hesitate spend years wishing they had seen it clearly. Urgency is about not missing the moment when all the pieces align. Entertainment may not feel urgent at first glance, but here's the reality. Content platforms live or die by their ability to dominate attention. When a company finds a groove with global storytelling, when it locks in subscribers, when it demonstrates it can consistently deliver hits, that is the window. Because once the growth cycle takes off, the stock doesn't move in a straight line, it surges. That's when urgency matters. The relevance is simple. People don't stop consuming entertainment even in uncertain economies. If anything, they consume more. That's why platforms that execute now matter more than ever. And of course, technology, specifically AI hardware, demands urgency like nothing else. The world is not just adopting AI, it's racing toward it. Every sector, finance, healthcare, logistics, retail, depends on it. The chips powering this revolution are in limited supply, and the company producing them holds the keys to the kingdom. When demand far exceeds supply, waiting isn't a strategy, it's a guarantee you'll be late. The relevance here is massive. This isn't just another tech boom, it's the infrastructure of the future being built in real time. Urgency also comes from the macro environment. Interest rates, inflation, and geopolitical tensions create volatility. Most people see volatility as a reason to run. Leaders see it as the signal to act. Because volatility is when great companies trade at discounts, when breakout points emerge, and when conviction separates winners from bystanders. If you wait for all the headlines to calm down, you'll be buying at the top. If you act with urgency while the world is distracted, you'll be building positions at the bottom. Relevance means connecting these opportunities to your life right now. Inflation is eroding your cash. Waiting in a savings account feels safe, but it guarantees you're losing purchasing power. Investing in strong companies isn't just about growth, it's about protecting your wealth. That's why urgency matters. Every month you wait, inflation eats away at what you've worked for. The relevance isn't abstract, it's personal. Think about how fast technology cycles move. Companies that dominated 5 years ago are already struggling, while new leaders emerge seemingly overnight. If you're not paying attention and moving when the window is open, you miss the cycle entirely. That's urgency. You don't need to catch every move, but you need to be in position for the right ones. And here's the truth most won't tell you. Opportunities of this scale don't come often. The alignment of AI breakthroughs, energy shifts, aerospace demand, and global uncertainty has created a rare setup. 5 years from now, people will look back and say, I wish I had bought during 2025. But that wish only comes true for those who act now. Urgency is not about chasing blindly, it's about understanding the moment and refusing to let it slip. Relevance is about knowing why these opportunities matter today, not tomorrow. Together, they form the mindset that transforms hesitation into decisive action. Because in the markets, those who move first with clarity and conviction reap the rewards. Those who wait for permission are always too late. The most valuable investment you will ever make is not in a stock, not in a sector, not even in a booming trend. It's in your own education. Money can come and go, opportunities can rise and fall, but knowledge compounds forever. That's the one edge no market crash, no recession, no geopolitical event can ever take from you. The truth is, the difference between someone who gambles in the market and someone who builds wealth in the market is education. The more you understand, the more confident you become, and confidence is what allows you to act when others freeze. Education in investing doesn't mean memorizing every chart pattern or knowing every detail about every company. That's noise. Real education is about principles. It's about learning how to evaluate a business, how to understand trends, how to identify catalysts, and how to manage risk. Once you grasp these, you don't need 100 opinions. You can trust your own. That's empowerment. Think of it this way. Most people rely on tips. They scroll through videos, articles, forums, hoping someone will hand them the magic ticker. That's why they fail, because when that stock pulls back, they panic. They don't know why they own it. They don't know its fundamentals, and they don't have conviction. Education flips that script. When you've studied the company, when you understand the sector, when you know the catalysts, you can handle the volatility. You don't panic at every red candle. You stay focused on the big picture. That's how real investors think. Take semiconductors. You don't need to be an engineer to understand them. Education means grasping the basics. AI requires advanced chips. Supply is limited. Demand is exploding. That's the story. Once you know that, you can evaluate the players. Who has the contracts? Who controls the technology? Who's printing the profits? That clarity only comes when you stop guessing and start learning. Or look at aerospace. Education teaches you to recognize how industries evolve. It's not just about planes flying again. It's about defense, about supply chains, about companies acquiring smaller players to expand their dominance. Without that knowledge, you'd miss the story entirely. With it, you see the opportunity as clear as day. Even in entertainment, education gives you the edge. Instead of just asking, is this stock up or down today? You ask, does this platform have the ability to consistently capture global attention? Do they have the infrastructure to scale subscribers? Are they monetizing effectively? Those questions are simple, but only if you've taken the time to learn how to think like an investor, not a gambler. Education also protects you. When hype hits the market, most people rush in blindly. They see headlines, they hear buzzwords, and they throw money without thought. Educated investors pause. They ask, what's the business model? Where's the moat? Is this sustainable? That pause is priceless. It saves you from chasing fads that burn out and positions you instead in companies that endure. The beauty of education is that it compounds. The first time you study fundamentals, it feels overwhelming. The 10th time, it feels natural. The 20th time, it feels second nature. That's the power of repetition. Every lesson builds on the last, and soon you're seeing the market differently than the crowd. You're no longer guessing, you're analyzing, and once you start analyzing, you start winning. Education also gives you control over your emotions. The market will test you. Stocks will rise and fall, headlines will scream panic, and volatility will shake the weak hands. But when you've done the work, when you know the reasons behind your investments, your emotions stay steady. You don't chase green days or panic on red days. You play the long game. That calm is what separates wealth builders from wealth chasers. Think about this. The average investor loses not because they pick bad companies, but because they manage them badly. They sell too soon, they buy too late, they panic at the wrong moment. Education solves that. When you know how to set entry points, when you understand stop losses, when you plan your exits, you stop reacting emotionally. You start executing with discipline. That's empowerment in action. The market doesn't reward luck. It rewards discipline. It rewards those who see patterns, who understand fundamentals, and who manage risk. Education is what gives you those tools, and once you have them, no one can take them away. Every trade, every investment, every decision you make becomes sharper. The best part, education never ends. Even CEOs keep learning. They read, they study, they analyze. Because the moment you stop learning, the market humbles you. But when you commit to continuous education, you stay one step ahead. And in a world where change is the only constant, that one step makes all the difference. So ask yourself, are you spending your time hoping for tips, or are you building the knowledge that will make you unstoppable? Because the truth is, the empowered investor doesn't just follow trends. They understand them, anticipate them, and profit from them. That's the difference education makes. That's how you stop playing the short game and start building a legacy. Here's the bottom line. 2025 isn't about reckless chasing. It's about smart positioning. We've got 5 fundamentally strong, technically timed stocks, each riding massive tailwinds in memory, aerospace, entertainment, AI, and energy. You've been handed not just tickers, but insight stools to level up from zero to CEO in your investing journey. So go ahead, make the move, invest with strategy, invest with conviction, because zero isn't where you stay, it's where you begin.